In the United States, about 1 out of 5 businesses fail within the first year of operation, according to the Bureau of Labor and Statistics. And the main reason for business failure really comes down to one thing: insufficient capital. In almost any study that's out there, including ones that come from SBA. Now, 86% of businesses, or almost all businesses, really rely on credit or financing for survival. Okay, but the problem is that most entrepreneurs go to their bank when they need money. And when I stand in front of a large audience, I always ask this question: where would you go if you need money? And the audience all at once will say, my bank. But the problem is that conventional banks focus on very conservative risk. And because business failure is so high, conventional banks just can't successfully lend in that space. It's just too risky for what they do. And this is why the vast majority of applications are denied from the big banks. Even people that try to apply, that think they might meet the criteria, almost 9 out of 10 of them get denied when they try to apply. And I think Bloomberg summed it up the best when they said, funding a small business, don't even bother with the banks. But there's great news, because what's happening is that only a fraction of business lending is even coming from the big banks. Okay, according to the Department of Revenue, less than 2% of business loans are even coming from conventional banks or our SBA loans. The majority of business financing that's taking place today is happening through alternative lenders. Okay, but alternative lenders typically only offer 1 to 2 types of business loans. So for example, one of the biggest alternative lenders we've seen that's come up in the last few years and gone public is a company called OnDeck. But OnDeck only deals with cash advances. So you need to be in business about a year. You need to have revenue of about $120,000 a year or more to even qualify with them. If you don't meet this very select criteria, then you won't get approved. And this is the way all alternative lenders are. They only offer 1 or 2 programs, so there's a very narrow range of qualifications that you must meet to get approved. So for example, if you have cash flow, then you can go to a cash flow lender like OnDeck. But if you went to OnDeck without cash flow, then you just simply wouldn't get approved. So you can only even go to a place like that if you know that that lending program exists. So for example, a lot of people don't realize that if they have collateral, that there are collateral based programs out there, or that if they have good credit, that they can get unsecured financing. Or a lot of people don't know that if they have cash flow, that they can go to a cash flow financing type lender. So even if the customer does know that they can go to this type of lender and they do go and get approved, then what happens is they leave a lot of money on the table, because again, that lender only can offer them one program based on very select criteria. And the lender doesn't offer any other programs. So even though the customer might have qualified for 4, 5, 6, 7 different kind of funding programs, because that lender only offers one, if best case, if they even found that lender and found that program, they would leave a lot of money on the table. Now, most entrepreneurs just don't know where to go to get money. I mean, that is the problem. Even though there's plenty of money out there available, and when they do find a lender that might help, the lender's so limited, as I mentioned, on programs they offer, that even if they do get approved, they only get approved for a small fraction of what they could actually get. This is really the cash access problem. And this is the exact problem that we look to solve with the Business Finance Suite, as you're going to learn in the next video, and as we dive into the solution in the next step.